Hi there. The purpose of this video is to explain to you why technical analysis is useful and how it can really help to shift the odds of being correct when it comes to your trading and investing. A lot of people look at technical analysis and just dismiss it, think that it's drawing squiggly lines on a chart, and all that really matters is the fundamentals and the news stories that are coming at us from social media and wider media sources. That's not true. That's fundamentally not true. The technical analysis is the only thing that matters, and I'm about to explain to you why. So if you've got 5 minutes and you've got an open mind, please watch this video. And if you still don't think technical analysis has any merit, then fine, just carry on the way you were. But the purpose of this is just to try and give you something to think about and to pause for thought if you haven't considered it before. So I'm going to stop sharing the screen and stop sharing my ugly face, and I'm going to start sharing the computer screen rather than my video. So here we go. This is we're using Bitcoin as an example. I could have picked a gold chart, could have picked the SPX, could have picked oil, commodities, energy, anything. Technical analysis is exactly the same on all charts. The rules that I'm about to explain to you are the same for all investments. Okay, so Bitcoin, as we know, has had a pretty good run, of course, from 2012, which is off the left-hand side of this chart. Price got higher and higher and higher, of course, until we reached the peaks of 2021, where we got to very nearly 70,000 US dollars. Okay, so that's fine. We all know that. So how can technical analysis help? Well, at that point, a lot of people were calling for Bitcoin to go to, I don't know, 100,000, 200,000, $1 million. And of course they still are. And that may very well be true. That might happen. But as a technical analyst, you have to have a completely unbiased mind. How do you do that? Well, the only way of doing that is obeying a very strict set of rules. Because if you don't obey a strict set of rules, it means that you're going to have your money and your investments tied up in something that is potentially either going sideways or down for 5, 10, 15, 20 years. Who knows? It might even cease to exist. Governments could come in and pass laws and do all sorts of stuff, and you could get caught up that way as well. So technical analysis gives us a framework. Okay, so how did it help us during this period? Well, at 70,000, Bitcoin was starting to get quite stretched, but it historically has been stretched above its moving averages in the past, and that situation has continued for a long period of time. But by connecting these 3 peaks here, or 4 peaks, or even 5, actually, if you look at the candles closely, with this one here, it started to become evident that an arc, or an inverted arc, or a dome was in place. That might sound like something ridiculous to you. Why would that make any difference? Well, this curved line is perfectly geometrically valid. So it's a complete mirror image. The left-hand side is a perfect mirror image of the right-hand side. So we can't just draw the line to fit any points. It is a perfect geometric arc. That's the first point to note. Second point to note is that the geometric arc is just acting like a resistance line, like any other resistance line. And please, 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 stop thinking that when the price crosses through the arc or crosses a line, it means that the technical analysis isn't working. Wrong, wrong, wrong. It does not mean the technical analysis isn't working. It means that the technical analysis roadmap has just given us a very important piece of information. What is that information? That we are now following a new path. Okay, and I'll show you what I mean here. At this point here, this dotted line, the price broke down. This was a very important early breakdown line. Okay, and when the price broke below it, it was giving us a message. It wasn't telling us that the chart wasn't valid anymore. It wasn't telling us that this line is somehow in the wrong place. The line is in the right place. The key is the information that it's given us. What has it told us? The price has broken down below a support line that has held the price time after time after time. So it's giving us an important message. Also, at this point here, price fell below, and I'm just going to put this is the 200-day moving. In fact, I'll just change it actually. So we've got I'll put the 30-week moving average on here. Okay, so this green line here is the 30-week moving average. Okay, and when price clearly broke below it and then broke below this support line, the information the chart was giving us was very, very important. Back then, the price was just below 40,000. course, price has fallen 50% since then. So wouldn't you have liked to have known at that point that the risk was heavily skewed to the downside, because you could have exited Bitcoin just below 40,000 instead of holding on for month after month after month after month, having false hope being dashed and turning back down again all these months later, and Bitcoin is 50% lower than it was when it broke down. That is where technical analysis comes in useful. And how is it going to help us in the future? Well, we've got a target zone. We've calculated using technical analysis where the price is likely to go. It doesn't mean the price definitely 100% is going to go there. There's nothing in technical analysis that is guaranteed. All we're doing here is finding where the odds lie. So please don't think that a technical analysis chart that I put out there is telling you what is going to happen. It's not. It's telling you where the odds lie. And if you're an investor or a trader, you want to play the odds. You want to put your money where the odds are most likely to be on your side. Okay, so how is this going to help us in the future? Well, the arc, this inverted arc, when price breaks through it and closes above it on a weekly closing basis, and it's looking less and less likely that that is going to happen here. It looks as though we're quite likely to close the week back inside the arc. So the arc is acting as a magnet at the moment. Even if price does break out of this arc and subsequently moves up, you can see how the arc is acting as a magnet. Price is trying to break through it, but it's struggling, and it's struggling because of the magnetic qualities of this inverted arc. It's a dome pattern. Okay, so when price eventually does break through that, and it very well should do at some point in the future, of course, once the Bitcoin bear market comes to an end. Okay, when price breaks above this dome, it will then have to get above some important key points. There's a horizontal support and resistance line here, this red line, and also this red line here is what we call the sleep mode line. Okay, Bitcoin has gone to sleep, and it won't wake up properly until price crosses that red line. Notice the green 200-day moving average is in roughly the same place as that red line. So when price moves above the 200-day or the 30-week moving average, they're roughly the same, by the way, 200 days and 30 weeks, roughly the same. When price moves above that green line and the red line, then the chart is giving us some very important information. It's telling us that we're on a different path. So this is a map, okay? It's a map telling us the path that we're following. And ever since this point here, and in fact, ever since we broke down so convincingly below the 200-day or 30-week moving average, ever since this region here and this bear flag breakdown, we've been on a path which is taking us down into the valley. Okay, once we get into the valley at the bottom, we get the map out to see where the path is going to take us next, and we'll know which path we're taking if and when we cross those important boundaries. Okay, it's like crossing a county line, crossing a boundary, and that is how you use technical analysis. Please do not misinterpret how we use technical analysis, and don't suggest that the TA isn't working anymore because a line has broken down and the price has broken through the arc. That is not how it works. We're using all of this information to tell us where the probabilities lie. It's as simple as that. And these techniques are just the tip of the iceberg. There are many more techniques that you can apply on this chart. Things like the triple exponential indicator, the moving average convergence divergence, the stochastic RSI, the Ichimoku cloud, all of these things that sound weird and wonderful, they're all pieces of evidence. Cycle analysis, that comes into it as well, of course. Tons of pieces of evidence, and it's that weight of evidence, okay, that weight of evidence brought together that gives us the confidence of knowing where the probabilities lie. Sometimes the probabilities are heavily skewed in one direction, sometimes they're heavily skewed in the other direction. So sometimes it's very clear from all the analysis that, in this case, Bitcoin is going down or up. Okay, sometimes you can say that with a high degree of confidence. There are other occasions when the technical analysis is very much split, okay, and the evidence is, not very clear, and that's when you have a high degree of uncertainty. Okay, and with any prediction, whether it's a horse race, some sort of a sporting event, a weather forecast, there are times when you can have high confidence. That's when you put all your chips on the table. There are times when you have low confidence, and it's only by assessing all of this evidence, this weight of evidence, that you can start to appreciate whether it's possible to have a high degree of confidence or not. Please do not follow those ridiculous accounts on social media where people say Bitcoin's going to do this or gold is going to do that, because that is not possible. It just isn't possible. You have to express confidence levels. Confidence can be high, confidence can be low, but you can't just put out chart after chart after chart saying with a high degree of confidence that X is going to happen or Y is going to happen. You know, you can probably tell from my voice, it's really starting to wind me up. My background, by the way, is in atmospheric dynamics, weather forecasting, and forecasting the future and predictions at the highest level within the UK military, the RAF, for example, forecasting for them what's going on in the atmosphere, forecasting for emergency responders during extreme scenarios. So probability forecasting and the science and art, in a way, of bringing together all this information and analyzing it is something that I've been doing for over 3 decades now. So it really does wind me up when people speak about it as if they've got a high degree of knowledge and come out with some stuff that is just absolute garbage. Okay, so rewatch this, you know, video a couple of times if you really want to sort of take it in, and if you didn't understand it the first time around. On our website, I'm not trying to sell our website here, by the way, because you know, you get information on Twitter, that's good enough for you, great. But if you want detailed information on a regular basis with podcasts and videos and the ability to ask questions and have them answered and all that kind of stuff, well, you know where to find us. It's northstarbadcharts.com. So we're here to help. Okay, we help as best we can on social media, and we help in great detail for our members at the website. And that's it. That's that's me getting that bee off, you know, a bit of a bee in my bonnet there about the way people were sort of interpreting technical analysis, and anyone that sort of interprets it the wrong way is going to get this video sent to them to save me having to answer the same question over and over again 1,000 times. So I hope you found that useful, and please feel free to come back to me with any particular comments that you want to. Okay, bye-bye for now.